I'm now joined by HSBC's Asian economist, Wellian Wiranto. Thank you very much for being with us. So oil prices are still climbing. We've seen quite a spike overnight. At these levels, is the global economic recovery in danger?
I think global economic recovery itself is still not in danger, although the risk of inflation on the upside has been something that our team has been highlighting. I think the risk of central bank not doing enough to tame sort of the first round effect of any kind of food prices, or in this case also oil prices coming up, cannot be discounted. I think the risk for now is still, we're still fairly okay with growth. Obviously, there's going to be pass-through impact. We see stories about U.S. consumers having to consume less, perhaps because they now pay more at the pump. So those risks cannot be discounted. But at least for now, I think inflation remains more of a upfront risk versus sort of a slowdown in growth.
More of an immediate concern.
Yes,
and when
definitely.
You say that there's a risk that central banks won't act fast enough, which central banks in particular are you referring to?
I think in general, there's still reluctance by Asian central banks to sort of react to the first round effect of inflation, given the stronger growth obviously in Asia than the rest of the world. I think the reluctance partly stems from the fact that they feel, hey, look, there's still downside risk to global growth. But like I said, I think the immediate one is really the elephant in the room right now in front of our eyes is still inflation risk. And I mean, to be fair, a lot of them have started to move. Bank Indonesia, for instance, despite the running reluctance, have finally raised rates, and we still see them sort of hiking even more. But I think increasingly, like I mentioned, the upside risk of inflation much outweigh the downside risk. I think the people are basically coming on board to that risk.
But higher oil prices, of course, feeds into inflation and exacerbates the problem. With regards to China, are you concerned that we're going to see a hard landing here, that they're going to be forced to move too quickly at some point?
I think right now they've done quite enough, actually. Not enough in the sense of, if you think oil prices, the scenario jumping up even further, that's still not the baseline that we have. We think, yes, oil prices continue to be restless. I think so far they've obviously tightened by 75 bips. They hike a lot on the reserve requirement ratio. They look poised to do even more on that front. So I think the risk of hard landing is still fairly minimal in our view. In fact, we still see a fairly strong growth, even close to 9% this year. So obviously, I think everyone's watching the situation very closely.
And food price inflation in particular is a concern. Do you see that sparking more unrest in Asia?
I think for Asia, people have been asking me between Asia and the comparison in the Middle East. I think one key thing, yes, global food prices have been going up everywhere. But in Asia, you have a situation where employment is still very strong. And if anything, I think employment prospects remain very strong. So I think you have this contrast where they can still have the capacity to deal with food price increase so far. There's obviously a risk of pass-through later on, but which is why we keep banging the drums on the fact that central bank has got to be more forthright in terms of tightening up front.
Back to oil prices. You said that at the moment the global economic recovery isn't threatened, but if they were to continue to rise, would it then be a problem? Your own bank says that $20 to $30 added on the oil price would be effectively a tax on the U.S. economy. At what point are you concerned about global growth because of oil prices?
I think should supply be tamed, I think that's where I'll be concerned. So far, basically, I'm worried about. I'm still thinking that if oil price does come up, you actually have slower demand that would basically have an equilibrium somewhat that prevents oil price from running up too much. But let's say there's a supply crunch somewhere because of the unrest, then it becomes a different issue of demand being tamed down somewhat. But I think earlier today, I had a guest on board phoning in from Jakarta, IEA, Mr. Fatih Birol himself talking about you still actually have supply on the ground. Obviously, sentiment is one thing, but the actual physical delivery, the fundamentals still there. So even as we are obviously watching out for any disruption to supply, they obviously have big impact on the oil price. We still sort of have some confidence, essentially, basically,
And do you think that OPEC would come on with more production if it were needed?
I think that they realize that they cannot kill global growth. Let's put it that way. I think they realize that global growth is something that they gotta sustain at some point. They probably want to have oil price at a certain level to keep the budget deficit at a certain level, given the needs to contain the unrest somewhat. But I think essentially it's everyone's interest not to see oil price going up too much. That's my point.
Wellian Wiranto of HSBC. Thanks very much.